The strategy I'm going to teach you today is so simple, so basic that you might even find it boring. But it'll make you $500 a day easy. And I have used this exact system to gain hundreds of thousands of dollars in funding. The biggest problem I see with traders is having overly complicated strategies with too many confirmations. And if your charts look anything like this, where you have a bunch of trend lines, zones, and a ton of different indicators, this is actually going to crowd your charts up and make it much harder for you to trade. The secret to successful trading is having a simple, repeatable process that you can do every single day. I'm going to walk you through step by step every part of this system so that you understand it to its full capacity. Then we'll hop on the charts and I'll hook you up with some of the tools that's going to make trading this strategy 100 times easier. So by the end of this video, you'll know exactly what the system is and how to start making $500 today by applying this exact strategy. Okay, so the first thing you want to know is what time this happens. We'll be looking at the Dow Jones at 9:30 Eastern Standard Time. This is very, very important. This is our New York open session. All right, so then what we want to do is dial down to our 15-minute time frame. This is going to be our 15-minute time frame. Now, what we want to do when we dial down to this 15-minute time frame and we wait for 9:30, we want to see our opening range break for the 15-minute. So essentially what we want to do is you want to mark out the high and the low of the 9:30 15-minute candle. Right? And then we want to wait for a break out of this range. You can see here price closed below this range, but we don't want to get in there. We want to wait for price to break out of that range in that direction and then show us a flip to take out the opposite range, high or low. So in this case, we broke the range low here. So what we will be looking for is our range high break. Now this is super crucial when you partner this with a larger time frame structure. So if we're in a bullish market structure overall and the opening range breaks through the low first, we can anticipate, because we're in a bullish market structure, that price will continue pushing bullish. We broke and closed through this level here, and then we want to see our flip and then our continuation, and we'll scale into our trade after the flip. So it'll look something like this on the smaller time frame. We have our opening range high and our opening range low. Price corrected up, didn't break through. Boom, it just broke through the low and it created this key low here. This becomes our key high. We need to now wait for price to take out our key high. So as you can see, price then pushes back up. We take out that key high. Then we want to scale in on the first 5-minute candle following that flip. And then we'll look for our high range to get taken, or we'll look to scale out at a 1 to 2 risk to reward. Don't worry, I'm going to break down live examples of what I mean, how this works, so that you guys can see the full strategy. I'm going to show you the past 3 days for YM and how we would execute on this strategy every single day. So in order to make this so much easier for you, I'm going to hook you guys up with the tool that'll mark out your opening range for you so that you don't have to do it when you hop onto the charts. It'll just already be done, and all you have to do is wait and execute. This is the FX market session. So you want to come over here to the indicators tab, and then you look up FX market sessions. You can see I have it clicked here. You want to open that up. So when you open it up, it'll have all of these different time zones checked. You can see it has London, it'll have the New York session, it'll have Tokyo and Sydney. All you want to do is uncheck the London session, uncheck the Tokyo session, and uncheck the Sydney session. Only leave the New York session checked, right? And then what we're going to do so that you can have your opening range is set here where it says opening range. You set that to yes. So you can change it from no to yes. This is going to give you your opening range. Now all we have to do is dial down to our 15-minute time frame and wait for this opening range to get broken. So you can see here, we're going to start off with the first move right here. Right, so what do we see happening? This is our opening range. This area here is our high, and this is our low for our 15-minute opening range. Price then broke above this high, right? We broke above this high, and then price came down and took out our key low. So what we want to do then, once we see our 15-minute range high break, we want to dial down to our 5-minute time frame. So our 5-minute time frame is going to show us our actual key shift. And what we're going to do is we're going to scale in after the first 5-minute candle close following our key shift. So you can see that price had created this high here, breaking through this range, our opening range being here. We created this high. That makes this right here this area my key low. So we need to see this level get broken for us to scale in. And if we dial down here, you can see that price in fact broke through this level within this 5-minute candle, right? So we broke through this level within this 5-minute candle, and then the candle closed as a bearish candle following that break. Now, all we need to do is get in. We'll set our stops above the structural high, and then set our take profit for a 1 to 2 risk to reward. Now, 1 to 2 risk to reward is going to be your most consistent, and we're going to use the 1 to 2 risk to reward as our tester for this strategy, but we can use 1 to 2 risk to reward or our key structural areas. So for those in our VIP group, we teach exactly how to target these key structural points so that we can extend our profits to areas like this, giving us a bigger risk to reward on this trade. But a 1 to 2, you can't go wrong with, right? So this is the next day on our list. We were waiting for our opening range. You can see that our opening range is here. You can see that this was the high. This was the low of our 15-minute opening range. Then what did we see happen? Price, in fact, pushed below here, breaking through the low of our opening range. Now, what do we need to do? We need to see our lower time frame market structure shift. So when we come here to our 5-minute time frame, you can see price, in fact, broke to the downside, right? Creating this low. This became the key high here. Why? Because it's the push that started for the break that created this low. Now, that means that we need to wait for this high to now be broken in order for us to scale in. And you can see here, dialed down to our 5-minute time frame, this is the candle that broke above. Now, what do we need to wait for? Our corrective structure for us to be able to scale in. You can see that price then corrected here, and we have our bullish 5-minute candle close right here. So this is where we want to scale in at. We set our stop loss below the structural low, and we can target the 1 to 2 risk to reward. And for this case specifically, we would be targeting these highs up here in my group. People in my group, like I said, know how we target our structural levels when we look to take profit and how we actually exit on this trade. If we exit by our strategy perfectly, then we would have exited this trade somewhere within this area up here, getting out after the first 1-minute bearish candle that closes following a break of our take profit, right? We don't want to just get out at our take profit. And for education purposes, we're just going to be doing a 1 to 2 risk to reward for today to keep things as simple as possible, because a 1 to 2 risk to reward, like I said, you cannot go wrong with. That's how we executed it there. How did price execute yesterday doing this same exact thing? So yesterday, you can see our 15-minute opening range starts here. This is the low. Now, what are we looking for? We went and wait for our break above the range. So you can see price breaks above the range here. Now we dial down to our 5-minute time frame, and now we're looking for sell positions because we had a break above our opening range. Now we need to identify what is our key low. This is our key low here, right? And why is this our key low? Because this is the low that started for the push that broke our opening range high. Now we need to see this low get swept in order for us to potentially scale in to the bearish move. So price then pushes all the way down, and you can see here is where we take out that low. Now what do we need to wait for? We have to wait for our 5-minute bearish candle to close following that sweep. So you can see we got that sweep. We get a corrective structure. This is the first bearish 5-minute candle to close following that sweep. We set our stop loss above the structural highs, and then we look to target a 1 to 2 risk to reward. And for those in our group, you guys know we target our structural low, which would have given us a 1 to 3 risk to reward on this trade. I hope you guys are understanding how simple this strategy is. You literally wait for your 15-minute opening range. You don't even have to set the opening range yourself because the indicator is going to do that for you. All you have to do now is wait for a break of the opening range and then a flip in the opposite direction. So you're asking me, Kai, well, this is too simple. This can't happen every single day. And just as no strategy is perfect every single day, I'm going to show you some days that this strategy are actually invalidated so that you know how we are going to be able to capitalize on those days. Because there's only 2 days and 2 times that this will ever be invalidated. And if you can understand this, you'll be able to capitalize on one and then forget the other. So if we take a look here on the 15-minute time frame from a couple weeks ago, you can see that we had our 15-minute opening range break out here and it never flipped back. Right? So when we have days of high volume or prices correcting a larger time frame structure, we can see an opening range break and then a continuation throughout the day. Well, I'm going to show you how you can actually execute based on that same exact. Well, I'm going to show you how you can execute on these days that are very rare. So you want to wait on these days for 10 o'clock. After we see our opening range break and price pushes up and it never comes back for us, we want to wait for our 10 o'clock. That is going to give you the 4-hour candle close. Now, once we get our 4-hour candle close, we want to scale in for a continuation of that move. So our 4-hour candle closes here at 10 o'clock. You can see that we close in a bullish market structure. We want to wait for then price to create a new high as it did here. We get a new high get created. We want to dial down to now our 5-minute time frame. And you can see after this new high is created here, we want to see price come down in the first bullish 5-minute candle we want to look to scale into. So you can see following that opening range, price closed as a bullish 4-hour candle. We've created a high here. This would be our first candle at 11:05 where we would look to get in on this 5-minute time frame. And then all we have to do here is simply target a 1 to 2 risk to reward on this trade. That is literally it. The 1 to 2 risk to reward is going to get you there every time. Now, this is the one time that price is invalidated. The other time that price will be invalidated is on range bound days. You can see that this was, price is just literally executing on that high low break almost every single day. But you can see we have days where we have market structure like this, where price creates a high and then it breaks through the low. Now, this actually doesn't invalidate our structure because price still executed beautifully, right? We close above that opening range here. Now we're looking for a smaller time frame shift for a sell down. Now, why I say that it invalidates it on choppier days is because there's no true market structure. The best times to use this is when we have some structural market direction. Now, though this executed perfectly this day, as you can see, we had a high get broken and then price came back down, broke through the low. We had a correction and then a sell move down to target our 1 to 2 risk to reward. If we dial down to our 5-minute time frame here within this structure, you can see we had that 15-minute opening range break where price closed above here, and then we seen a lower time frame market structure shift as we got a break through these lows here. Price whipping through these lows as soon as this low got broken here, essentially, because that's our key low. It started for the push that broke through the high. We get this, we finally get a full-on correction, and then you're able to scale in at this key resistance level here. You wait for your 5-minute counter to close, anticipating price can push down in the structure. Looking for a sell move here, you set your stops above the structural high, and then you look to target that 1 to 2 risk to reward. So you can see that even on the choppy days, this executes, but it is less defined because we have a less defined structure. So it can make it harder to see these actual flips. And in days where the markets are choppy like this, it's best to just stay away. So now you know how to capitalize on days of high volume and how to avoid the days where we have that low and slow volume. And this strategy will print you $500 a day. I use this exact strategy to take a $50 combine challenge with Top Step that only cost me $50 to take. I then passed that account, and by risking literally $250 a day, looking for a 1 to 2 risk to reward on this account, you can make $500 a day super easy. So if you guys want to see more of how I use my system and a 9-step guide of how I actually prepare for the markets every single day, you can watch this video here.